Good morning, everybody. This is the Live Market Open for Thursday, February 11th. I'm Yohay Elam of Forex Crunch, Market Movers Podcast, doing the show as usual for fxstreet.com. We'll talk today about the yen. Well, not only about the yen, recent developments in markets in general, charts and levels. The next 24 hours, we have Yellen once again, Yellen and the yen, and of course your questions. So please, you're welcome to post them on the chat. If you cannot see the chat, the address is on the screen, tlk.io/fxstreet-forex-live-video. Okay, let's begin with the big event of the week that we had yesterday in the afternoon. Janet Yellen, the chair of the Federal Reserve, was speaking in Capitol Hill, testifying. We had the statement released, and then she was grilled questions for long hours, boring hours. But the most important things were said in the statement. In general, bottom line, it was slightly dovish, okay, but not extremely dovish. The first reaction in markets was a stronger US dollar because the US dollar was under so much pressure that when the Fed was sort of balanced, it was, this feeling was it could have been worse, okay? So the dollar strengthened initially, but then we returned to the doom and gloom. What did she say? The main thing she said that the financial conditions have worsened and that they can slow the path of rate hikes, okay? So they are aware of what's going on in markets, falling oil prices, falling stock prices, dangers to global growth, okay? Specifically, how do commodities impact the United States? Commodities, some are produced in the United States, like oil and the shale oil industry, but it also affects countries that produce oil and other commodities, and they have less money in their pockets, so there's less demand for US exports. However, she did keep it balanced by saying it's unclear if the volatility is temporary or lasting. Okay, of course, something that did eventually hurt the US dollar is that she mentioned the strength of the US dollar, okay? She said this is one of the things that create tighter financial conditions, of course. Something that hurt the dollar more specifically, even though it was really theoretical in my opinion. She said she doesn't know about the legality of negative rates. That was an answer to a question, but the mere mentioning of negative rates, even though the Fed just raised the rates, hurt the US dollar. Of course, she explained the rate hike by saying that the same things we already know, that the US economy is improving, and they would rather raise rates now than delay too much and act too abruptly. Okay? I see here some comments. I can never get on time and have been to keep refreshing and end up missing the beginning. Okay, we're working on trying to find a solution for that, so it'll be automatic, but yeah, sorry. Anyway, hope everybody's here, and I'm looking forward to your questions. Okay, what else did we have yesterday? Or perhaps we'll move to charts just a little bit, okay? Okay, this is the big event of past few weeks. Dollar yen, I know not many like this pair, but it's really a huge market mover. We've seen it. This is the daily chart. We're back to levels last seen in, a year and a half ago, more or less. Let's look at the hourly chart. Yesterday we had a break under this line in the sand or the day before, early yesterday, we had a break under 116. Beforehand, 116 was the line in the sand for the Bank of Japan. They began talking about intervention, and eventually they did intervene. They did set negative rates. We had the pair going all the way to 121.50, deteriorating, breaking now below this level, and now we're seeing a fresh break. Okay, the yen is the safe haven of choice, the ultimate safe haven currency, sought in times of trouble. It's very frustrating for the Bank of Japan after not keeping the tools in the shed, after setting a negative interest rate. We're back to levels. It's even lower than before they acted. I mean, much lower before they began talking about acting. Anyway, 112.50. I mentioned that yesterday as some kind of support. I must say that I don't know where the next support is. It's like with the rise of dollar CAD, it's the sky is the limit at the moment until we reach new levels. We can point to the range seen yesterday as some kind of support and resistance lines right here: 115.25, 114.25. And 116 was the previous line in the sand, but basically this is quite a huge move. We're already 900 pips below the highs seen just less than 2 weeks ago. Okay, so it's quite a spectacular move on dollar yen. Of course, also other yen crosses are on the move. Okay, this is just the safe haven of choice. There is talk in markets that the Bank of Japan is intervening. Is checking out prices, ready to intervene directly in currency markets. They really don't like the strengthening of the yen, especially not against the rivals in China, especially as oil prices are so low and Japan can actually afford a much weaker yen. Okay. Speaking about oil, yesterday we actually had oil inventories coming out a bit better than expected. That means that they did show a small drawdown in inventories. Less inventories means, in theory, pressure on the price of oil. On the other hand, we had rumors that some oil traders, are dumping oil at rock bottom prices because they don't have where to sell it to. So I'm not sure if this is true or not. Maybe it's a bit too early. But anyway, WTI crude oil, the lowest price since many years ago. We're actually somewhere 2003, around almost 13 years ago. Okay, this is the monthly chart. This means worse mood in stocks. Most of Asia was closed, but including Japan tonight. But this didn't stop the markets that were open to slide. Okay. Well, let's talk about another safe haven, the euro. Okay, the euro did react quite nicely to Yellen at first. Here's the big dip in euro dollar that we've seen yesterday, all the way here to 111.60. Okay, because she was less dovish than expected, and so we had. But then when she kept on talking, and they realized, well, we're not going to have any rate hikes anytime soon, and the world doesn't look so good, and the Fed isn't sure about too many things, we had euro dollar moving back up. We're still under 113.40, which was the previous high. So if you wish, you can see here maybe a lower high. Okay, 113.40. Now the last high here was 113.30, but I wouldn't 113.20. Sorry, but I wouldn't make much of a big deal out of it. All in all, euro dollar is stronger, hugging the 113 level, slightly higher this morning, but more importantly, holding on to higher ground. Okay, so this move right here is the crash of the US dollar on the ISM non-manufacturing PMI last week. We had the pair moving a bit higher, and then another shift to the upside. The euro remains a safe haven currency, even though we have so many problems in Europe, problems with banks in Italy and Germany, of course, uncertainty in Spain, uncertainty about Greece, refugee crisis, you name it, okay? Anyway, levels to watch for me, 112.15, 113.40. Pound dollar. Yesterday we had very disappointing manufacturing production figures from the UK. Okay, they were all four figures missed. They missed badly, including a year-over-year drop in both figures, industrial output and manufacturing production. This triggered a short dip. Then we had late in the day a rise in the pair because of the weakness of the US dollar. Now we're falling once again because the atmosphere is negative. Negative atmosphere, good for the euro, good for the yen, bad for other currencies such as commodity currencies. A bit lower on the day, 144.50 is some kind of support. 143.65 is much stronger support. Resistance at 146.50, but it's hard for me to see the pound tackling high resistance this situation. Okay, talked about dollar yen. Dollar CAD, in theory, the most affected currency by the falling oil prices, but showing much more resilience of late. Of course, this level here, almost 147, was when the pair was much more vulnerable, but since then the Bank of Canada did not cut rates, and we had all the move here over 1,000 pips. Since then, the recent deterioration in oil prices already does push dollar CAD higher. Yesterday we've seen it touch 140. Okay, this line is not that relevant anymore. I would say 140 is an important level. 139.10 is not so strong in the middle of the range, but what we've seen here is that 137.87 is very strong support. Okay, if we have further falls in oil prices, we could have a break above 140. Okay, but remember the Canadian dollar is not that weak as it used to be. Also, other commodity currencies are suffering. Of course, the Australian dollar is below the highs with this gloomy mood, but also the situation in Australia has improved. All these currencies, the commodity currencies, they do enjoy a lower for longer situation in their currencies. Okay, weak Australian dollar for a long time. It helps other industries evolve. It helps the economy diversify away from mining just a bit, but the situation isn't that bad. Same goes for New Zealand that boasted an excellent drop in the unemployment rate last week. With this fall of the US dollar yesterday, late in the session, we had it cross above 67, but now we're back to the same familiar range, 65.80 to 67 in the QE. Good morning, everybody. Dollar Swiss remains low because I suspect that the Swiss National Bank is not intervening. 97 is some kind of support here. Euro Swiss continues to be pressured to the downside. We had, I suspect, intervention by the Swiss National Bank to push it all the way higher. That means stronger Euro Swiss, weaker Swiss franc. Since then, it's been weakening. 109.40 perhaps is some kind of support. Not really. Anyway, this pair is prone to intervention. Euro pound, we had it break above 77.40. It still had to struggle with this line. I believe we do have a break here. The euro is a safe haven currency. The pound is not. We reached new highs yesterday at 78.50, but still below resistance at 78.70. 77.40 turns into some kind of weak support, followed by 76.60. Okay, euro yen. Here we can see how the the strength of the yen is just overwhelming everything. Also, the euro is a safe haven currency, but the euro is more like playing catch up with the yen. So we're back to the bottom of the old range of 127 to 129. Gone are the days which were just 2 weeks ago, less than 2 weeks ago, and the Bank of Japan set negative rates and sent euro dollar all the way to 132.25 or all the way down. Now, the yen crosses, of course, are more. We're seeing the strength of the yen and in pound yen. We broke above the previous low of 163.80. Low so far, 162, 162.70 at the moment. Sorry for that noise. Currently around 163. The low was 162.30. We have to zoom out to a daily chart to understand the magnitude of this fall. Okay, quite a huge fall. Next to 163.80 was not only the low seen in January, but also a low seen right here in February 2014. So now with pound yen, we're back to levels last seen in 2013, over 2 years ago. The next line that I see is 160.25. Okay, quite a huge fall. But very, very choppy. Okay, we had it fall all the way to 163.80, a very strong correction, even more than a normal correction, I would say, to all the way to 175, and now a resumption of this crash. How many consecutive days? 1, 2, 3, 4, 5, 6, 7, 8 days of falls in pound yen, over 1,000 pips. Very, very exciting cross, which means opportunities and also dangers. Okay, any questions? We'll move to other events for the day. And and for yesterday. Okay. I mentioned lower chances of a rate hike. Okay. Look at this, 100% against the rate hike in March. Okay, so we have more than a month to go until the next rate decision by the Fed, a rate decision that is accompanied by a press conference and fresh forecasts. Bond markets are pricing 0% of a rate hike. If we do fast forward all the way to February 2017, exactly a year from now, still 81% against any kind of rate hike according to bond markets. I see here a question by Fabian. Good morning. Do you see the pound as a strong or weak currency at the moment? What is your bias in short, medium, long term based on fundamentals? Well, in the sort of medium term, it's all about the referendum, the EU referendum. So my bias until the referendum is negative and then positive, okay? Because I think there's a lot of uncertainty. If the UK leaves the EU, it's in theory bad for the UK economy and bad for the pound. With opinion polls showing sometimes a majority against staying in the EU, it's a risk. Okay, we still don't have a set date for the referendum. We might have Germany trying to help the UK government, David Cameron, with some limit on refugees in the March EU summit. We're not sure about that, of course. Anyway, that's the medium term. My bias remains negative until the referendum. Shorter term, it's mixed. Okay, if we have more doom and gloom in markets, then we'll have the pound, I believe, falling against the dollar because the pound leans towards the group of commodity currencies, more risk, and recently figures have been negative. But if we have an even more dovish Federal Reserve, I believe that perhaps we could have a move to the upside, but the pound remains for me more of a weaker link. Okay, so my bias is more negative, but in the short term thing, everything can happen. Until the referendum, I'm more negative. Question here from Jax: is it yen strength or dollar weakness? A bit of both, but I would say more yen strength on. Wow, as we speak, we're already at seeing another fresh fall in dollar yen. This is more yen weakness, I would say, because yen strength. The yen is seen as a safe haven. Interest rates are low. It has been a funding currency. When in times of trouble, money is repatriated home. And even if this is not exactly the case, then we still have this phenomenon of markets believing that this is the safe haven, the currency of choice. We have an absurd situation in which Japan, which has debt to GDP ratio of well above 200%, has its bond yields. The yields are at negative for 10 years. That means you pay the Japanese government to hold your money, and you're never really certain they'll pay back the debt. Okay, so but anyway, this is more yen strength, and also trying to especially after the Bank of Japan showed its muscle, okay, at 116. Mentioned intervening, eventually made a big move, setting historic negative rates. And now we've seen the markets beat the Bank of Japan once again. I think markets are feeling super, super strong against the Bank of Japan, and it's just going crazy. Okay, so it's sort of markets are seeing this weakness of taking advantage of the weakness of the yen. Dollar strength, dollar weakness. Sorry, what did I say? No, wow, 112 at the moment, below 112. Anyway, what I want to say is, markets are taking advantage of the weakness of the Bank of Japan and pushing the yen higher. Regarding dollar weakness, that's part of the story. The bad figures, the ISM non-manufacturing PMI, and we had a small relief with the NFP. And then Yellen said yesterday that, well, they still could raise rates, but markets perhaps seeing it as she's gradually backing off from raising rates. They cannot say outright that they failed with the rate hike, but markets see it as okay. The with some dollar weakness as well, but it's more the risk-off sentiment and yen strength. Their question here, dollar Swedish krone. Well, I think that's maybe the first, no, maybe it's the second time we have this kind of question. Swedish krone. Krona. I don't know how it's pronounced. Sorry if I'm not saying it correctly. Here we are on the hourly chart. In Sweden, we also have negative rates. The Riksbank, if I'm saying it correctly, was one of the first to set negative rates, but remember, it's not a major central bank like in the Eurozone or in the or Japan or the United States. Anyway, looking at the daily chart here, we have, I think this is where they set the negative rates, sometime in 2014. Since then, all in all, we're in a big wide range between around 8 and 820 and 830 and 870. Relatively narrow range. If we look a bit more closely, this could be some kind of resistance in the shorter term. 865 to 835 would be levels to watch. Okay. Let's move to the hourly chart. This could be also marked as some kind of line right here. It's a bit choppy. 850. Yeah, it's a bit messy, but I see it all in all as trading in range. It's getting close to some kind of support here. Yeah, if it breaks below, well, maybe we'll put it here, 832. Then we're at the lowest levels since October. I think it's more or less trading very closely to the euro. So yeah, these are the levels to watch. All in all, we're in a wide range, but leaning to the downside. I think that if we'll have more euro strength against the US dollar, we could have the Swedish krona playing along. Okay, EU is rising now too, though. Yeah, the euro dollar is enjoying the same safe haven flows like the yen. Well, not the same, but similar, a bit lagging the yen, a bit weaker than the yen. 113.40 is the next line of resistance. 112.15 is support. Maybe the move in the Swedish krona goes hand in hand with that. So more risk off this morning. Oil prices, as I mentioned, together with the fall in dollar yen, oil prices are falling 26.60. That's yet another new low. Remember, OPEC countries are unable to decide between themselves on a rate cut, and it's not enough. You need also collaboration with Russia, Norway, Canada, and of course the US shale industry. So oil prices continue falling. There's this risk off. And as I said beforehand, it's when oil prices fall, it's supposed to be good for consumers. But the current market environment, we have also developed countries, of course, exposed to the falling oil prices, less jobs in the shale industry, less jobs in Canada, for example, in Norway. We also have many financial institutions. It's not only workers, it's for instance, Chesapeake was rumored to go for bankruptcy. They denied it, and they seem to be clear for now, but it also weighed on markets. Various banks in Europe may be exposed to commodity companies or commodities in general, and there are worries about that, specifically banks in Germany. So it's all sort of a mix of doom and gloom. I thought that this week, when China is on holiday, celebrating the new year, it would be somewhat of some kind of a better atmosphere. But no, the doom and gloom that accompanies us since the beginning of the year, it's sort of going down, small corrections, and then going down again. Now, yesterday it wasn't all that bad. The US stocks closed more or less flat, but European stocks are falling, Chinese stocks, Japanese stocks are falling, and of course, various currencies. Question here, can you explain the relation between oil and the ECB mandate for inflation? Sure. ECB has a headline mandate for inflation. One mandate, they don't care about employment officially, okay? They only care about headline inflation. I mean, they care about many things, but that's their target. 2% or a bit below, that's the way it's described, of headline inflation. When oil prices fall, they miss their target. Okay? Now in the United States, they say that's not important because core inflation is what's important. Oil prices go up, go down, and we don't care. And also the US economy is stronger. So falling oil prices is in theory only positive. In Europe, the situation is worse. And what the ECB told us various times, especially Mario Draghi, is that there is a chance that the fall in oil prices will eventually reach other products and turn into outright deflation. Okay? And they don't want that. They don't say it's transitory like in the US. They say it could feed into other inflation and parts, and then it will be higher to raise inflation even when oil prices rise once again. Okay? What's wrong in deflation? It's a situation where people have this mindset that prices are going to fall, so they don't buy, and that turns into a vicious cycle against the economy. Okay, so falling oil prices raise the chance, in theory, for the ECB to act. We heard this week from Jens Weidmann that the head of the Bundesbank, which is usually against monetary loosening, that the ECB is ready to act, but many doubt that the ECB has the tools. And in general, when all the central banks are dovish, who can win? It's a race to the bottom. Okay, I see your question, Euro AUD and Euro Kiwi. Let's take a look at that. Talked a few times here in the show about Euro Aussie. Wow, that's quite a sharp move to the upside. 150 pips this morning, crossing the 160 line, 160.55 at the moment, reaching resistance there at 160.75. Why did I put that line in the past? Oh, there's a good reason why I put that line, because it's been a double top here in January. Well, not that, a few weeks ago. Okay, so we're getting very, very close to resistance. Actually, we touched resistance and paused. Support, maybe this line should undergo, yeah, this could be a better line. 150, yeah, let's put it here at 158, works as some kind of support. Logic behind the move, safe haven euro, risk Aussie, well, that's it, I've said it all. Okay, further support if we have a bounce, 156. Resistance, well, we could have this peak as the next line of resistance, right? Not that far away, 160.150. But let's look at the daily chart and see if we have further levels above. Yeah, 160.150, mentioned that. Further resistance I see only at almost 166, okay? So if we have a break above 161.50, in theory, talking about technicals only, we could have a further rise to the upside. Okay, Euro Kiwi, more or less the same story, I believe, but the Kiwi in recent days has shown a bit more strength than the Aussie. Let's see if we have a material change in direction. Also here we have a nice move to the upside, about 1%, 170 pips this morning. A bit under resistance here. I see resistance at 171.45, followed by 172.75. Okay. Support. I'm not sure it's relevant, this line anymore. Let's look at the hourly chart. Also here, very, very sharp move to the upside. Okay. 168, I would say. Let's make it round, is support. 171.50 is resistance. These are the lines I see now. If the doom and gloom continues, the pair has more room to the upside. Of course, The moves are also seen in euro dollar, much milder, of course, because the dollar is bang in the middle between the safe haven euro and yen and all the rest, which are going down. Euro dollar is up this morning around 20 pips, nothing extremely dramatic. Yesterday we had much more drama, but we could see much more drama later on today. Oil prices are falling, other commodities are falling, negative sentiment. Stronger euro dollar, stronger euro dollar, weaker dollar yen. Wow, as we speak, I see another tumble down. 111.82. We already reached 111.54. I'm sure that Kuroda and his colleagues, today it's a bank holiday in Japan. I don't think they're really on holiday. I think they're eating their fingernails, banging their heads on the wall or whatever you want, and thinking, what can we do to reverse this course? This is a huge, huge fall in dollar yen. Okay. Let's talk about other things. We talked about Yelen's testimony, mentioned the oil crash under 27, rumors about dumping of oil in America. Wall Street held down, most of Asia closed, the rest is falling. Yesterday, we mentioned industrial output in the UK and oil inventories. What do we have today on the agenda? Relatively lighter calendar. At 1:30 GMT, we have the weekly US jobless claims. Okay, let's look at what we're expecting in markets. Let's refresh. So expecting more of the same, a drop from 285 to 281. We also have in Canada the new housing price index. Maybe has some little effect on the Canadian dollar, but the market mood has a lot more. We have the second part today of Janet Yellen's testimony. It probably the most important event of the day, but yesterday's release was more important. That's because that's when she laid out her prepared statement. Today it's more of a Q&A. We had lots of Q&A yesterday. There are questions about regulation, about community banking, about many things that may be of high importance, but they don't really move markets, okay? She could release some kind of interesting headline or be pushed to release something interesting, especially as oil prices continue falling, but usually the second part is not as strong as the first part. I'm sure markets will move regardless, but I'm not sure she will trigger the headlines, okay? For those who are trading the Aussie at 10:30, we have RBA Stevens talking. So it could move the Australian dollar, especially in the wake of falling commodity prices. Let's see what he says. The RBA is not expected to act anytime soon. They were relatively sort of okay with everything that's going on, but things may have deteriorated since then. And before the show tomorrow, we have German GDP, worth mentioning already today, because it's really, really an open question if this strongest economy in Europe is in a good shape or not. Okay, that's at 7 GMT, 8 here in the old continent. We also have revision of CPI, but the most important thing I would say is quarter-over-quarter GDP in Germany. Last time it rose 0.3. We're expecting more of the same. There are positives for the German economy, okay? Investment in accommodating for refugees is sort of more economic activity, okay? The weaker euro helps exports, even though demand from China is weaker. And the ECB's actions are causing money to be cheaper, and that, in theory, encourages more investment, okay, and lending and economic activity. The negatives are worries about the global economy, of course, weakness in China, and that's about it. For it's the figure for Q4, so it's a bit late. That's how things work in late, but probably more accurate. In the United States, it's released earlier and then revised twice. So we have these figures, this figure in Germany tomorrow, we already had release from France and from Spain. Tomorrow we have Germany. And later, after the show tomorrow, we have Italy and also the whole Eurozone figure. If we have more of the same, it's I don't think it'll move markets. If it'll be better than expected, good for the euro because it means less chance of ECB action. If it'll be weaker, it's weaker. But you know what? Let me take back what I said. I really don't know how it's going to be, because if it's going to be bad, maybe the bad news is going to be supportive of the euro as a safe haven currency. And if it's going to be good, that means the global economy isn't doing so badly. So maybe no less demand for the euro. It's going to be a bit of a mess. I still think it's of high importance to see what's going on over there. Yeah, European figures are a bit tricky for the euro. Okay, so these are the events today and of course tomorrow. Wow, it's a relentless fall of euro, dollar yen, 111.67. And yeah, and the euro dollar is going along. Okay, we're getting close to resistance in euro dollar. Sharp move to the upside, 113.31 at the moment. These are the highs of the day. Let's see if we can break 113.40. If we make it, next line that I see is 113.75 because it's a veteran line, and then 114.60, 115, 117.10. On the downside, it's 112.15 and 110.70. Okay, very sharp move in euro dollar. I think I showed it to you a few times. Since we had the break above, no, don't have it here available. We had the break above this wedge. We're seeing clear direction to the upside, even though we had one significant day of correction. I'm sure that Mario Draghi, exactly like Kuroda in Japan, is very frustrated by this. The weak euro helped the Eurozone economy, pushed up inflation. If you have a stronger euro, you have cheaper oil prices and cheaper everything from imports, and exports are becoming more and more expensive for consumers outside the Eurozone. This is still a much better situation for the euro than we've seen when Draghi first set the negative rates a year and a half ago, but still an unfavorable situation with the rise. I'm sure they would like to see it closer to parity, or at least 105, 110, and not grinding its way to the upside. But what can they do if the Fed isn't keen on hiking rates? If the ECB has little tools in the shed, this is the direction. Okay, we have a break. 113.46 above 113.40, the highest level since October. Interesting to see live movements in real time. Next level 113.75. Okay, it's already a rise of over 50 pips today and 0.5%. Remember when euro dollar spiked last year when the Fed took rate hikes off the table? It went to 117. You headed there. I'm not sure. It was not in August. It was just before the Fed hinted about no hike. It was actually a reaction to the big crash in stock markets led by the Chinese stock market. I think we'll have some kind of verbal intervention or by the ECB before we reach 117. But as we've seen from Japan, they will have a tough task. I think we have a few also technical hurdles between these levels, 113.44 at the time now I'm talking, and 117.12, and that's 114.60, 115 area. So yeah, we're seeing sharp moves in markets, but I'm not sure. I'm not sure we'll get there. Any ideas on pound yen? Woo, wow, that's quite a crash. It's already, wow, this session, 3.5 points, equivalent to 350 pips, over 2.2%, 160.80. I would say that 160 is a round number, so it could provide some kind of support. Okay. but real support 160.30 I put here on the chart for some reason. There must be a good reason for that. Yeah, because that was the top line here in October 2013. Okay, so that perhaps might provide more. No, forget about what I said. This is really moving fast, extremely fast. We're about to lose the 160 level. Well, not that fast, okay, but you see, I was just beginning to speak and we already have another fall under 160.30. 160 is the line round number. Let's see if we have a break. Anyway, the next level to watch here, things are moving fast, as you can see, 156.70. In general, the doom and gloom also reflected in oil prices is very negative for pound yen. Okay, 160.22. We're seeing some kind of bounce here. Very fast moves across the board. Where will it go? I don't know. I think we're seeing a bit of extreme moves here, and we might see a bigger bounce than we've seen so far. We've seen already 30 pip bounce just in the past, or already 40 in the past few minutes. I think we might see a bigger bounce because I think the move is a bit extreme. But trying to catch a falling knife or picking bottoms is always a dangerous task. Oil prices reached a new low of 26.52 on WTI. And it's quite amazing. Dollar yen already dropped under 111. Look, 110.96 has been the low. Also here we have some kind of bounce. Also euro dollar is back down, reached 113.54 and 113.30. Feel like a sports commentator here. Not even given a chance to get in on these. Yeah, I think the moves are a bit extreme, perhaps not in euro dollar, but in the yen crosses. We're already seeing some kind of a bounce, okay? Yen crosses, for instance, here, 40 pips above the lows in dollar yen. And in pound yen, 40 pips as well. I think we could have another bounce, but yeah, it's very hard to catch a falling knife with this extremely gloomy mood, okay? Okay, time is flying by when markets are moving fast. Let's do the wrap-up for today. This is the wrap-up for the live market open on February 11th. It's a Thursday, perhaps Black Thursday. Extreme moves in markets today and yesterday. Let's first look at the charts because we have action and a lot of it. Okay, dollar yen biggest mover, almost 2% to the downside. The moves began yesterday when the market was first convinced that everything's cool, and then began the dollar sell-off began against the safe havens, and now we're seeing these moves become more and more extreme. Big desire for safe haven currencies. Japanese government bonds are trading at negative yield, even though they have a debt to GDP ratio of over 200%. Very weird days. You already dropped under 111 in dollar yen, and just yesterday we were at the 115 handle, well below the previous line of descent for the Bank of Japan of 116, and already 1,000 pips below the levels seen 2 weeks ago. Okay, dollar yen is the biggest mover. Safe haven flows, doom and gloom. Why is this doom and gloom coming? Oil prices reached a new low. As we speak, they've reached currently 26.77 on WTI. Brent is not that far away. 26.52 is the low. Talk about oil traders dumping oil, cheap oil in markets. It shows not only a problem of supply, too much supply, but also not enough demand. And in general, the falling oil prices has repercussions. That means jobs in the United States, not only in oil-producing countries. I mean, also the United States is now an oil-producing country, and exposure of various banks to oil companies, rumors of bankruptcies. In general, it's a bit of a panic. And usually when we have these kind of panics, markets tend to overshoot and then to correct, but hard to catch a falling knife. Another currency that is benefiting from the negative atmosphere is Euro dollar made a break, perhaps a false one, above the previous high of 113.40. Further resistance 113.75, 114.60, support 112.15, 110.70. Okay, the pound is not a safe haven currency. It trades alongside commodity currencies, so it's falling. Nearly 100 pips against the US dollar this morning, 144.25, support 143.65, resistance 146.50, further support 142.30. Dollar CAD rising alongside oil prices, getting closer to 140, just touched 140 earlier. 140.50 is the next line of resistance, followed by 141.50. Okay, support at 137.87 yesterday. Actually, crude oil inventories weren't that bad, but there's really too much oil sloshing around the markets. I think I've repeated this sentence almost every day in the past few weeks. Aussie dollar as a commodity currency is falling. We had a small dip under 70 with this recent flash crash a few minutes ago, but currently holding above 70. Things aren't that bad in Australia, but it's getting carried away even though China is closed this week. Real support is 68.30, resistance 71.40. Big moves also here. 80 pips down on today. Also, the Kiwi dollar is still holding on. Look how this line of 65.80 does work as support. A bit more predictable, a bit more slower currency, but also the Kiwi dollar is falling over 1% today. Okay. What happened yesterday? Part of the recap. Yellen was slightly dovish. She said that financial conditions can slow rate hikes. This was the signal that there will be sort of cemented a no hike in March. Okay, she did explain how commodities, their slump means less demand for U.S. exports, but she still was careful, saying that it's unclear if this volatility is temporary or lasting. She did mention the strength of the U.S. dollar, and now we're seeing it weakening. And she did comment about negative rates in an answer to a question that also spurred some speculation that the Fed will go negative, but I think it was only very theoretical. Okay. Other things we had yesterday, talked about them. Okay, today we have jobless claims at 1:30 GMT. Shouldn't have much of an impact. This figure has been climbing up, not so positive, but has less of an impact. Yellen speaks again. In theory, this should be less interesting than yesterday's appearance because it's only Q&A and she dodges hard questions. But given the recent falls in markets and perhaps maybe more intelligent questions from politicians in the US, maybe we'll have more action. But I must say that even if she doesn't say anything, markets will interpret it one way or another or think about what she didn't say. So I'm sure we'll have lots of action. Other things to watch: RBA's Stevens talks at 10:30, and German GDP before the show tomorrow morning at 7, expecting more of the same, 0.3 quarter over quarter. Okay, let's take another look at charts and then head off. This is just before we look at the chart, just to show you once again, no rate hikes are expected. Basically, only 20% of rate hike expected in February 2017, a year from now. And for March, 0, the absolute 0. Okay. So according to bond markets are more dovish than the Fed. Okay. One more look at markets. So far, the breach of euro dollar above 113.40 has been a false one, but we often have a first move which is false and then another move. I'm not sure what's going on, if this is what we'll see. And dollar yen did stabilize, well, for now, 111.30. This is still a huge fall, nearly 2% on dollar yen. And of course, yen crosses, like pound yen, which we mentioned before, reached low of 160.07, round number of 160, so it works as support. We're already 70 pips above it. Wild days in pound yen. Okay, it's not market expectations, it's the algos. Yeah, it could be also the algos exaggerating to some kind of headlines. Let's see if I can find something interesting for you that moved markets now or just I believe it's just the Europe Open that, yeah, we had, European stocks opening lower. Of course, move to sort of a continuation of Asian stocks, and fresh European traders came to their desks and sold off assets, sold off risk, but safe havens like the euro and the yen. Okay, so that's it for today. Today we had a really live market open because we had extreme moves already during the show. Be careful out there. Volatility is much higher. Wish everybody a safe and successful trading day. And see you tomorrow. We'll see if Yellen moves the markets once again, if things stabilize. And tomorrow we also have big events to close the week. Okay, so that's it for today. Thank you and bye-bye.